Good morning everyone. So it's a Thursday here in Riyadh, and I'm gonna use the King Fahad Road to go to Makkah Road and then to my work. And from what I have observed on Thursdays in the mornings, there's a smooth flow of traffic. The rush is not like it's on the other days, but let's see. Let us put it to the test actually, and see if it's if my observation is right. But also I'm gonna play some podcast. Let me take a turn. Okay, so I'm gonna play a podcast and just stay silent. Meanwhile, you just enjoy the whole ride. Podcast isn't playing. Maybe there's some issue with the internet. It wasn't supposed to be this way, but anyway. Oh yeah.
I'm Jessica Ettinger, CNBC. Wall Street opens Thursday morning after a record-setting day on Wall Street. The Nasdaq hitting a fresh record high. The major averages all higher. The Dow up 217.5%, led higher by shares of Boeing, which were up more than 3%. The S&P 500 index up 37 points. The Nasdaq up 192 points, just about 1%. Companies whose shares hit fresh record highs Wednesday include Ralph Lauren, Coach Parent Tapestry, Uber, Microsoft, and NVIDIA, which became the first $4 trillion company ever.
We got the NVIDIA record market cap.
Oh, there you go. Yeah. All right. Hey, who is the leader of most supply on Earth? Jensen Wong. I know that there's a tenor, especially in New York City, about rich people and how they conduct themselves. This man's made more millionaires than anyone in America.
There's CNBC's Jim Cramer and Carl Quintanilla. President Trump releasing new tariff letters with new reciprocal tariff rates, but they're really the same rates.
About 21 countries have now received those letters, and the president said that more countries, including Brazil, could get letters tomorrow. But here's today's round. The Philippines, Iraq, Sri Lanka, all of these countries facing tariff rates between 20 and 30%, roughly on par with what the president first threatened to impose back in April. So the news here really is the date for them to take effect has just been moved now to August 1st. None of these countries export much of anything to the U.S.
CNBC's Megan Casella. Twitter, now X, has lost its CEO. Linda Yaccarino stepping down from the role after 2 years running Elon Musk's media company. Amazon reportedly had a slow start for its Prime Day sale. Adobe said day one was the biggest online sales day of the year so far. Across all retailers, though, including Walmart, Target, Best Buy, and all who are running sales. Turns out Amazon, though, is selling more of its own goods than those from third parties because it can eat some of the tariffs.
Amazon can take a much bigger hit. They can work on much smaller margins because Amazon's bulk of their cash doesn't specifically come from sales, right? You've got Amazon Web Services, so they can hedge it, they can offset the price, and they can take a bigger hit than sort of, you know, a Joe mom and pop who has a small third-party reseller store.
That's the United Nations Consumer Suppliers CEO Brett Rose on CNBC. Samsung's Unwrapped had some new things for consumers. consumers looking for a new phone.
What Samsung announced today are two foldable phones. They're called the Galaxy Z Flip 7 and the Galaxy Z Fold 7. Fine, we don't really care about foldable phones right now. What we're really talking about, though, are the AI features from Google Gemini. Now, it has this thing called Gemini Live, which is Google's multimodal system for AI. It can use visuals, voice, or text to let you chat with Gemini through the camera or the microphones, etc. It also has some other features like AI photo editing tools and so much more. Now, compare that to Apple, which just a month ago we were down at WWDC and they had minimal AI software features at that event, and we're not even expecting much more from the new iPhones that should be launching in about 2 months or so.
CNBC's Steve Kovac. On Thursday's watch list, earnings are coming from Delta Airlines, plus Slim Jim and Duncan Hines parent ConAgra and Levi Strauss. We find out how many people applied for unemployment benefits last week. McDonald's has snack wraps again, starting Thursday. Jessica Ettinger, CNBC.
Which American states are driving business? Last year, Virginia took the honors. Which state will be the top state for business this year?
America's top states for business. The full list revealed Thursday and streaming on CNBC Plus.
A listener production.
Wall Street surges as investors put trade concerns to one side.
And Aussie shares expected to lift on Thursday after Queensland beat New South Wales in the State of Origin series.
I'm Tom.
And I'm Ryan.
It's Thursday, the 10th of July. Welcome to the Comsec Market Update. Couldn't help yourself as a Queenslander, could you, Ryan? Get it out of your system.
Yes, indeed. Congratulations to Queensland. What a comeback victory that was, especially on New South Wales' home ground.
Well, I suppose in the pantheon of unexpected outcomes, we had the RBA a day earlier, so Queensland, I suppose, fits in with that. You had Christian Horner deposed as the head of the Red Bull racing team. It's the Ides of July, by the sounds of it.
It is, and last night we did see the chip giant Nvidia reach a $4 trillion US valuation. It's the first company to do so. Its shares were up 1.8%, and tech shares drove the market higher.
Yeah, and I mean, when you look at the signals in the market below the headlines, it's a slightly more encouraging picture today than it has been in recent days. The blemish, you would say, maybe the bank stocks. So the BKW Bank Index was down by around 0.1%, but there was an outperformance on the part of technology, to your point, Ryan. The Nasdaq up 0.8%. The Philadelphia Semiconductor Index was up 0.4%. The broader market, the S&P 500, up by 0.5%. The Dow up 0.4%. But within the session, there was a bit of a bumpy ride. Actually, you had the Nasdaq, for example, at one stage fall from session highs, and it declined by as much as 0.75% from its highest level to its low, and then was able to recover. So that was good news. Similar performances for the other indices as well. So it was a bit of a bumpy ride. So on the one hand, the impulse that was provided by the Federal Reserve in the form of the minutes from the last policy setting meeting helped push things along a little bit, but then they ran into a headwind with the latest unveiling of the correspondence from the White House relating to trade. Mr. Trump sending out more letters to countries, informing them of the regime that will apply in relation to their exports to the US. So there's still a bit of a push me, pull me experience going on, Ryan.
There is indeed. So US President Donald Trump said he would levy a 30% tariff rate on Algeria, Libya, Iraq and Sri Lanka.
The engine of the global economy was really looked at carefully.
That's it. And 25% duties on products from Brunei and Moldova, and a 20% rate on goods from the Philippines. So the levies were largely in line with rates Trump had initially announced in April, though Iraq's duties are down from 39% and Sri Lanka's reduced from 44%. Out of the 7 countries mentioned in Trump's announcement so far on Wednesday, only the Philippines, which sent some $14.1 billion US worth of goods to the US last year, ranks among America's top 50 trading partners. It sells to the US electronics, auto parts and textiles. Imports from other 6 nations put together amounts to less than $15 billion US, Tom, with Iraq an exporter of crude oil accounting for more than half of that sum. So minor countries when it comes to the US trade discussion, one would have thought.
Indeed. I suppose when you're looking at the bigger picture, though, somewhat noisy, but the markets are looking through the noise at the moment. Another piece of noise that has perhaps moderated in its volume in the last couple of days has been the bond market. So we've seen a steady march higher over the course of the last almost week, I would say, and it turned around quite convincingly last night. You saw 10-year government bonds down by about 8 basis points to 434. You saw a decent fall for 2-year government bonds last night. That was less related to the minutes and more relating to a successful auction of US Treasuries.
We saw the US Treasury market extend its first gain in 5 days, Tom, after an auction of 10-year notes drew good demand, quelling concerns about the US fiscal outlook. There has been some concerns about demand for US Treasuries, with potential waning foreign demand on that fiscal outlook. But certainly we did see strong demand last night. In fact, the high yield for the 10-year auction of $39 billion worth of notes came in at 4.362%. The big focus last night was on the US Federal Reserve's minutes, and Fed officials diverged at their June 17-18 meeting about how aggressively they would be willing to cut interest rates. They were split between concerns over tariff-fueled inflation and signs of labour market weakness, and also economic strength.
And not for the first time, there is still that enduring conversation around the impact of tariffs being transitory, which I suppose at the margins is encouraging for investors. But just quickly back to those bond auctions, like you can almost draw a line in the sand here that around 4.4%. You know, that's an attractive level for your marginal investor. They'll be attracted to a bond yield of that level. So that gives you some sort of point to navigate by, doesn't it?
It does, and certainly the big focus last night as well was really on the Fed's minutes interest rate projection. So that's had a big influence over the direction of bond yields more recently. In particular, we did see strong employment data last week curb expectations for Federal Reserve interest rate cuts, and US legislation was passed that extends tax cuts. So last night in the Fed's minutes, we saw new rate projections released following the gathering, which showed 10 of 19 officials expected at least 2 rate cuts by year end. 7 policymakers, however, projected no cuts at all in 2025, while 2 projected 1 cut. So policymakers pointed to considerable uncertainty about the timing, size and duration of the tariffs' potential effects on inflation. Depending on how the duties filter through to the economy and trade negotiations, officials took varying views on what the inflationary impact might be.
So again, you pull back, you take the noise out of the picture, and in the medium term, the expectation is that we're going to see 2 rate cuts, and that is not upsetting in the least. And indeed, that move lower for interest rates overall was supportive